Hi there, welcome to Kneppy Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability, and sometimes my ability can be lacking. In a way, I'm learning just as much as you are by doing these videos. I do learn a fair bit, and a lot of that is because of you and your fascinating questions and or comments. So it is Saturday, the 13th of December, 2025. Time is currently 9:28 a.m. I was going to say, so we have about 2 hours left of trading today, but we have no trading today because it is Saturday. So let's go back 6 days ago to Kelly Ma 3206, who first of all says, happy birthday to Marlo. Thank you. Well, he should be saying thank you. But she asks, would you have time to have a look at my gold and silver stocks? Astral Resources, ticker code AAR, Investigator Silver Limited, ticker code IVR. I'm looking for your comment. First thing, and thanks, and we are welcome. First thing I should say is I know nothing, absolutely nothing about these two companies, apart from, more than likely, they're mining exploring companies. Astral Resources, gold, I'm assuming, because you mentioned gold and silver stocks, and Investigator Silver Limited, silver, because it's got the word silver in the name. That's all I know about these two companies. And if you don't know anything about two companies, mining companies, the best approach would be maybe to have a look at a presentation, the most recent presentation. I do know Astral Resources actually did release a presentation about 9 days ago. Not sure about Investigator Silver, but the next best thing would just be having a look at the gold and silver chart. So if I saw the gold chart and or silver chart looking really bearish, I'd actually be bearish about these two companies. If the gold and silver chart were bullish, I'd be naturally bullish about these two companies. So let's start there. Let's have a look at the gold and silver chart, because that's what they're doing. I'm assuming they're explorers, not producers. So this is the gold chart. It's a beautiful chart. By the way, this is the daily chart going back a year and a half. It's a beautiful chart. If someone said to me, this chart is awful, I would have to question them. Why is it awful? Now, maybe they would say the gold price did get to a high in middle of October, and it hasn't exceeded that highs just yet, but it's getting there. So it's a beautiful chart for gold. And silver, I'm quite bullish about this one. It broke out not that long ago, a couple of weeks ago. Maybe you could say it did have a down day, 4% down in the last 24 hours. But you could say maybe it's just accelerated a little bit too quickly and it's ripe for a little bit of a pause. But the gold and silver charts at this point in time look absolutely wonderful. And thus, I can't be anything but a little bit more bullish about these two companies, even though I know nothing about them. Okay, so now the first thing I'm going to do is I'm going to, what was it, AAR? What I'm going to do is open up or have a look at Astral Resources' most recent presentation, and then we'll have a look at the chart. Now, this company has a market cap of 339.26 million. So it's a larger gold explorer, but I do remember them releasing a presentation, but I have not had a look. Oh, they also had a placement, looks like. Recently, strongly supported $65 million placement to Advanced Mandela. So that could be a good thing moving forward because they're not in production yet and they need money to put their project in production. So at the Resources Rising Stars Summer Series Conference, they did release a presentation. Now, the reason I'm opening up this in Market Index, not ComSec, is because I try to open up a document in ComSec before I started recording, and it took ages. And this opened up almost in the blink of an eye in Market Index. Yes, I'm not the biggest fan of ComSec sometimes. Anyway, so first of all, and this is actually what I do a lot of times when I don't know much about a company, I will seek out presentations. Maybe that's being a little bit lazy, but I do like presentations because it gives you a lot of detail, particularly presentations that have been released recently. Now, I'm a very big fan of prospectuses for new IPOs or new listings, and I do also like presentations as well. Now, you could say presentations are more of a marketing tool. That's fair, but you do get a fair bit of information, but you have to be aware that sometimes the information can be a little bit biased. Not completely biased, but you have to understand that this is can be used as a marketing tool for companies. Okay, how long was it? 24 pages. So, straight away. So I know nothing about this company, and straight away I know something. their projects are not only in Australia, but they're in West Australia near Kalgoorlie, very close to Kalgoorlie. According to this, looks like they have at least 3 projects in that area: Faysville, Mandilla, and Spargoville, just to the south of Kalgoorlie. So there we go. That would be a fairly well-known gold area in the world, not only in Australia, in the world. Corporate overview, how many shares they have on issue. You could have seen that in market index. It's up the top here, 1.48 billion. Yep, that's right. Market cap is 346.6 million at 23.5 cents per share. Current share price is, I think it was 23 cents. Yeah, 23 cents. No, share price went up 9.5% yesterday. Cash on hand, 20.9 million. Gold spot price is $6,400 Australian dollars right now. If you care about shareholders, board of management own 4.3%. I actually do prefer that to be a little bit higher, but that's okay. Don't know any of these names on the management team. And also, that could be just me lacking knowledge about names within this area. Maybe some of these guys, they look like they are people, or not people. It does look like they are men. Mark, Jed, Brendan, and Matt. I'm trying to think. Yeah, those are men named. And they do get a fair bit of research coverage here. Euros, Hartley's, Taylor Collison, Capital Markets, Shorten Partners, Petrol Capital, and GBA Capital. I don't know a few of those names, but some of those names are well known. Okay, what else do we have here? Multi-decade de-risk development in a tier 1 location. Oh, so they did a PFS. And according to this PFS, at a gold price of 4,250 Australian dollars per ounce, I'm assuming this is Australian dollars. It doesn't mention whether that's Australian dollars or US dollars. That's important. Anyway, so you just say why the price of the underlying commodity is really important for the success of a company. Because if the gold price goes up $2,000 from 4,250 to $6,250 per ounce, actually does say Australian dollars there. It's got ounce. I'm assuming, no, that's ounces. It doesn't say Australian dollars. For some reason now I was going, OZ is Australian, but brain explosion. Anyway, so just a $2,000 increase in the price of gold. So we're talking about a 50% increase, more than doubles NPV and doubles free cash flow. So you're getting this leverage. And on the flip side, if gold prices go down, you're going to see the complete opposite, which is why sometimes you will see gold companies' share prices go up more significantly than the gold price, or down more significantly if it's decreasing. Payback 12 months at 4,250 and 7 months for 6,250. Growing resource base as well, which is understandable. Mine life is something I want to know now. Mine life, 13.2 years mining, 18.5 years processing. ASIC, important, $2,085 per ounce. That's in Australian, over life of mine. And what else? They call this a T1 jurisdiction, gold jurisdiction. I'll probably agree with that. And what else do we have here? Okay, drilling reports. Aggressive exploration. Okay, nothing. DFS. So what's the DFS? That's the, I forget exactly what that means. The minor. Definitive feasibility study. There we go. Definitive feasibility study. Okay. And forward work plans. This is important. When do they want to get to mining? And based off this, commissioning would be towards the end of 2027. So still 2 years away. So a lot can happen in that 2 years. But unless something goes pear-shaped with the company, they have the Appendix 1 PFS financials. Yeah. But unless something goes pear-shaped with this company, maybe one of the managers has an affair with another, who knows? The ultimate share price of this company should closely mirror the price of gold. Not exactly, but it should mirror the price of gold. So let's have a look at the chart for Astral Resources. I'm pretty sure this would be in my gold watch list. I just want to confirm that. Yeah, it's in my gold watch list. And this chart looks fairly similar to the price of gold. In fact, what you can do is just overlay price of gold. And let's do that right now. Gold. Very convenient, it's right there. And well, it doesn't actually, let's just zoom in a little bit more. Yeah, okay, so it does now. And what I'm going to do is actually change the red or orange. Yeah, so over the last year and a bit, it has perfectly mirrored, the Astral Resources share price has perfectly mirrored gold price. But if you go actually a little bit further back, it doesn't exactly. In fact, Astral Resources share price has actually increased a little bit more than the gold price. Okay, so that's Astral Resources. First time I've ever looked at this company in depth. So hopefully they're going to go into production in a couple of years. The other one was IVR. What I will do is go back to market index. Silver company, and my thoughts on silver right now are quite bullish because silver price has broken out. It has pulled back in the last 24 hours, but that's okay. And this company, formerly Investigator Resources, let's have a look to see if they've released any presentation. Yeah, here we go. On the 26th of November, they did release a presentation. AGM, and also it looks like they had the AGM. Now, sometimes with an AGM, you get a lot of voting stuff in it, which is really boring. Australia's only pure silver development project. There you go. I should be having a closer look at this company, maybe. I don't have a silver. I don't think I have. I don't have a silver watch list, so maybe I should change that. Silver price up 70% in 2025. Yep. Looks like everyone's lining outside a building to buy some silver. Customers queue outside ABC building in Sydney. Well, there you go. It's close. Silver historically cheap. Well, since it's gone up 75%, you can't really say that anymore, can you? Yeah, maybe. Oh, they're talking about in relation to the gold-silver ratio. I sort of do actually agree with that. We're finally starting to see some action in silver, but if you compare the chart of gold to silver, only recently have we seen significant action in silver. Reversion to mean requires silver to increase by 30%. So it's not by much from here, is it? Only pure silver project in Australia of development scale, EV to silver equivalent resource per comparison. I actually do like these little charts because it has all these different companies on it. Has all these different companies, so you can actually see some of the other silver players on the ASX. For instance, Sun Silver. Yeah, know that one. Boab Metals, Silver Metals, or Silver Mines, Unico Silver, Polymetals, Andean Silver, Mithril Silver and Gold. Yeah, so quite a few companies I have heard of here, a few I haven't heard of. So what you're looking for here is, I'm assuming you want at the bottom of the list. So Sun Silver is looks like the best company here to buy into. And then Marin Metals, Argent Metals, and then Andean Silver, Polymetals, Broken Hill, Unico at the worst, and Mithril Silver and Gold. So yeah, so even though they're trying to sell Investigator Resources here, in a way they're more selling Sun Silver, in my opinion. That's just my opinion. Another PFS, this is from 2021, so it's actually a little bit old. Free cash flow 487 million, NPV 202 million, IRR 54% production, capital, all-in sustaining costs. And with silver prices going through the roof, maybe that has significantly changed. So maybe they need to do another PFS, because that would have been based off, yeah, silver price increase 100%. Adding $1 billion in free cash flow. Yeah, so they probably need to do another PFS. Maybe they don't have to. But anyway, research value, 3 current share price. Okay. Paris DFS. It's in South Australia. Okay, so anyway, I know a little bit more about these companies, particularly that first one, Astral Resources. But let's have a look at the chart before we get rid of gold. For IVR. Spent a little bit too much time on these two companies, to be honest with you, but first time I ever looked at them. Investigator Silver, chart should be looking really good. It does. It's a brilliant chart. It's a beautiful chart. It reminds me of Sun Silver. Reminds me of Polymetals, I think, maybe. Polymetals did do a capital raising recently. Share price did drop. What else is there? Andean Silver. They're all looking good. They're all looking good. Which one's the best? I don't know. I'm going to go back to Investigator because I'm not sure I do have this in any of my watch lists, or the other ones I do. So I should be adding this. By the way, the TIG code, or the, what's the markup of this company? 148.48 million, 2 billion shares on the issue, share price is 7.5 cents. Okay, so do I have this in my watch list? I don't think I do. I don't. I do have a gold watch list, but not a silver one. Maybe I should change that. I'll put this into my mining watch list. There we go. Okay, so bullish both these companies simply because gold and silver. Hopefully I've answered your question, Kelly Ma. And I'm not going to be spending 15 minutes on all your other comments. So, Kelly Ma, you have won today's prize. Paul says, fine, I took a position in Domino's Pizza in early October this year. Since then, the share price has been recovering. There was an article in the Financial Review that said that private equity wanted to take over the company. Can you share your thoughts on the chart? Okay, so that's all you've asked. I won't be speaking about anything else. And the chart looks good. Okay, so definitely have this on my watch list just because of the chart. Is there value here? My only complaint would be the share price and the chart haven't turned positive because of anything the company is doing. Maybe it's just rumors. Maybe there's fund managers out there who think it's cheap, but the company had or did release something quite negative on the 27th of August. So that wasn't that long ago. And the share price on that day dropped 22%. But that could be the bottom. That could be sort of indicating we have reached the bottom with Domino's Pizza. Share price popped up on the 9th of October, 7.57%. And that could have been on rumors maybe. But that looks like it was a bit of a shift in sentiment at that point, and the sentiment has continued. My only problem is in the past we have seen what seemed like shifts in sentiment, and those shifts in sentiment turned nasty. The first one was back in late 2023. Then the company released something negative on the 25th of January. Share price dropped 31% on that day. And I'm pretty sure even, oh no, I do remember this. On the 7th of February, share price popped up 21%. But I do remember not being that impressed with the reasoning behind why the share price rose that day. And the chart tells me that the market wasn't that impressed either. Anyway, so the chart actually does look good, but I do prefer these sort of turnarounds in the chart and sentiment on the back of positive news flow, like a positive update, like a nice positive update from the company. That would have been a much better catalyst for a shift in sentiment and trend. Anyway, but the chart does look good. Also, Paul says, can you share your thoughts on PNI chart? Definitely. Okay. With Domino's Pizza, is this company high quality? I do have more than questions about the quality status of Domino's Pizza. So if you go to the weekly chart and just have a look at the 200-week moving average, I think there would have been a time where I would have said Domino's Pizza was a high quality chart. High quality company. Now I am unsure about that. And they could become a high quality company in the future. Their pizza is definitely not high quality, one of my least favorite pizzas out there. But just because I don't like their pizzas doesn't mean other people don't. I think their pizzas are cheap, maybe. Anyway, with PNI, I would be more willing to call this company high quality. And if we have, or say on the weekly chart and go back, say 10 years, the share price has generally remained above the 200-week moving average. And whenever it drops below that moving average, it's been good buying during the COVID-19 financial panic. And also, it did drop below the 200-week moving average on occasion in 2022, 2023, in that rising interest rate environment. And it almost bounced perfectly off it in April, and it's getting very close to that moving average right now. It's very close. So you could actually argue with me that this is a high-quality company, and we're getting close to the point where this could be good buying just based off the chart. Simple thing. I don't know a lot about this company. Dividend yield 3.6, PE ratio 26.6. I'm pretty sure they invest. They're a fund manager who invests in other fund managers. Is that a good way to put them? They're a fund manager who invests in other fund managers, or something like that. Pinnacle. I am going to ChatGPT this. fund manager who invests in other fund managers. Right way to say it. I don't know. Yes, you're basically right. Thank you, JudgeGBT. Although maybe JudgeGBT just spits out what you want to hear. The clean, accurate way to say it is Pinnacle Investment is a multi-affiliate investment management firm that partners with and invests in independent fund managers. Okay, there you go. So that's a much more sophisticated way of saying what I said it. Anyway, so I don't know what that means, but could you, I don't know. Not my favorite type of companies, but if you do like their business model, investing in other fund managers, private fund managers, whatever it was, you do like that, you think there's a lot of growth in this sort of area, you do like the chart, maybe in the company, you think it's good value now, maybe now is the time to buy into Pinnacle, where it's good. Anyway, if we turn our attention to the daily chart, however, you do get a different sense, a bit of weakness in the daily chart. But again, I will say this, if you do consider this company high quality, I don't care about the daily chart and how it looks as much. It's all about the quality and the value. Can you get a good quality company at pretty good value? And that's why I do like to look at the 200-week moving average, because that's a good sign that there could be some value, So I think it all depends on how you view this company. If you don't really care about whether it's high quality or not, the chart looks terrible, not a buy. But if you do think this company is high quality and good value, and now could be a good time to buy. So it all depends. Fishball says Fletcher Building breaking out. And I'm pretty sure I mentioned Fisher Building or Fletcher Building in last week's technical update video. So let's have a look at the breakout for Fletcher. I completely forgot about this one. I saw it potentially breaking out and I went, ooh, it looks really good. And it broke out, last Friday. And it's remained above the breakout level. It tested it on Wednesday. You can actually see the share price get to that level and then bounce back up. So yes, I have to agree with that. This is a breakout for Fletcher Building. And now I'm going to write it down because sometimes I just have to write it down. Fletcher Building. I put a buy. So what I do is I write a buy list on a little notepad I have, and Fletcher Building is on that list now. Doesn't mean I'm going to buy it, but I do like, this is the sort of thing I'm looking for. So thank you for reminding me, Fishball. Bradley McDonald says, would love a revisit on Clinuvel. Okay. So I did this quite a few years ago, 3 or 4 years ago, $21 million in operating cash flow. And I have a feeling the share price was significantly higher, yet the cash flow, the operating cash flow, is significantly higher than it was back then. And it just shows you how shifts in sentiment can drive the share price of the company down well below to where it was, even though the company has grown significantly. I'm not going to do a video like this, like I did in the past. In fact, I called it one of my favorite companies on ASX right now. And I'm glad I used the words right now, because it's definitely not one of my favorite companies right now on the 13th of December, 2025. Okay, so Clinuvel, nothing wrong with this company except, share price down 3.9%. No, 3.7%. Except it's still a one-product company, and they used to issue pennies for C's when they didn't have to, and then they got rid of that. I still wish they did it. If you have a look, in fact, what I might do is I'll open up, if I can find it here, where is my fiscal AI? Oh, it's FinChat. And what I'll do is I'll just show you, do I consider this company high quality? I've been umming and ahhing about this one. They are a one-product company, and I'd like them to be a little bit more diversified, have more diversified revenue streams, put it that way. But if you have a look at their financials right now, so if you have a look at their revenue growth, so it has been slowing down. So over the last 10 years, 39.9%, but over the last 3 years, still 13.1%. Earnings per share growth over the last 3 years, 21.2%. 19.2% over the last 5 years. So there's still growth out there for this company. Don't really care about the dividend yield, dividend payout ratio. That's irrelevant for this type of company. Margins really nice, 91.1% gross margins, 48.2% operating margins. Return equity, return invested capital, really nice 5-year averages. P ratio currently 17.8, has been as high as 40, 45 when there was a lot of positive sentiment behind this company. Forward-looking P ratio 17.2. Is that at the price target of 24.53? If it is, yeah, I sort of understand. I don't know. Cash, they have net cash of 223.58 million. So the thing that has been driving the share price of this company down has just been negative sentiment. So you have a look at the chart. And I think one of the things that started the negative sentiment, and this was a few years ago, because the share price reached a high of $44 back in 2021. And I believe one of the reasons why the share price started to drop was because of competition. I still remember looking because there was some competitor in this space, and I haven't heard anything about that since. And that was one of the triggers to shift or drive the share price down, was this belief there was a competitor out there who was going to disrupt this space. And if you have a look at their financials, revenue growth, and maybe now it's more of a case of, well, it looks like the company is not growing nearly as quick. It's true. They're not growing nearly as quick. Definitely true. But I don't think, the way I look at it is, I don't think this company is expensive at all. It's got a P ratio of 17. And if they can just continue to grow a little bit each year, that's nice and cheap. And if they diversify their revenue streams, this company probably is looking really cheap. But there are questions. Now, based off the chart, now the weekly chart, by the way, let's have a look at the weekly chart first. And if we just get rid of those two moving averages, so if you just have a look at this weekly chart, I'd say this is not a high quality company because the share price has been below the 200-week moving average for quite a while. And I sort of agree with that. I wouldn't classify this company as high quality because there are some questions, particularly with their revenue streams. And I like just to see in market cap 640.56, which is no indication of whether the company is high quality or not. But I thought that was going to be higher. But again, P ratio 7.8 for a company that has been growing. Anyway, so has the market overreacted? That's probably the big question right now. And if we go back to the daily chart, share price, that's the weekly chart. If you go back to the daily chart, share price had been a downtrend for a while. It is showing signs of the bottom being reached. So it looks like that bottom was about 950 back in June because we've seen two higher lows. Now, we're not seeing higher highs, so definitely not an uptrend. And we see a lot of moving average crossovers, which is telling me the share price is now just going sideways, even though there's a fair bit of volatility in there. And we saw that. Share price dropping 7.5% and 15% in 2 consecutive days. And then the share price recovered. So that's telling me right now, there's a fair bit of volatility in the share price. There's the bears and the bulls aren't winning at this point in time. It's a nice even battle, and it won't take much for the sentiment to shift back to positive. And if they start to grow at a quicker rate, which I'm not sure they would do, but if they do, you could actually say you could get significant financial expansion and you get a multiple expansion. Just think if the market was willing to pay a P ratio of 35 for this company, straight away the share price doubles, and if they get financial expansion on top of that, share price could quadruple from here in a fairly short period of time. But that's if. There's a lot of ifs there. Thank you, Bradley McDonald. Mr. Jigger Civil, buy 29 metals and Aries Resources for copper. I do have developed a copper watch list. Oh, I'd only have 6 companies on it so far. Havilah Resources, chart looks pretty good. Aries Resources, chart looks pretty good. Sandfire, chart looks pretty good. Hillgrove Resources, a bit of life on Friday. This one I actually am more interested in because I think the market has so much negative sentiment about this company that even with copper prices increasing, this company's being left behind. But if copper prices keep on increasing, by the way, copper prices, we'll have a look at that in a second. But if copper prices keep on increasing, Hillgrove Resources will be benefiting from that. 29 metals, chart definitely looks better now. And what's the other one I've got here? Capstone Copper. In fact, what I'm going to do now is what are some of the copper stocks on the ASX? So let's, and I'm going to ignore BHP and Rio. I'm going to ignore BHP and Rio. And first thing they mention is BHP, Rio, South 32. So let's go Sandfar, I've already mentioned them, 29 Metals, yep. Aries Resources, yep. And then some of the explorers, Bougainville Copper. So some of these I don't know anything about. Ausquest, Australian Gold and Copper, Qoria Copper, Cyprian Metals, Pure Mining. And I'm wondering if these companies' share price looks really good right now as well. AQD, let's have a look at this one. Ausquest. No. What other ones were here? AGC, KCC. Oh, yeah, it's starting to turn. And KCC, Qoria. Ooh, nice little pullback. Anyway, so thank you for that, Mr. Jiggerful. And you're right, 29 Metals and Aries Resources, two companies you could buy if you want pure copper plays, mostly pure. We'll call them mostly pure. What is JetGPT says? 29 Metals operates a gold, and yep. And other assets, Aries Resources produces gold alongside some gold. But if you're really risk averse type of person, yeah, BHP Rio, not that bad place. Richard Benovic says, can you please do an update on Qoria, Q-O-R? Okay, so I actually did mention I don't mind Qoria as a company for the longer term, but this is a tech company and we have seen a fair bit of weakness in the tech sector in Australia. So I can't remember what the chart for this one looks like, but I am thinking it has pulled back a fair bit. Share price down 4.4% on Friday. So I'm assuming you're just talking about the chart. Yeah, the share price has pulled back a long way. In fact, we've got a moving average crossover as well. So when I was thinking of buying this, it was back in July. Share price broke out just about 50 cents. So share price has pulled back all the way to that level. So this is the effect of weakness in the overall sector. All companies can be affected by it, and Qoria is not immune to that. Now, you just said, can you please do an update on Qoria? Let's have a look at the most recent pennies for C, because maybe you don't care about the chart. I don't know why I put that in. The ticker was already there. Let's just have a look at the most recent financial numbers. Are they still, well, this company has there is seasonality here and they have a really good quarter. I can't remember what that quarter is, but let's have a look at the most recent quarter. And I'm going to say this, if this company can be operating cash flow and free cash flow positive on their seasonally worst quarter, that would be important to me. Okay, receipts, 46.3 million, cash flow positive, operating cash flow positive 17.1. So maybe this was their best quarter, or does tend to be the best quarter, and they are free cash flow positive in this quarter. And what you can do is just go back to the July quarter. Let's have a look. July quarter. And not only in the July quarter we can see what happened in this quarter, but we can also see what happened for the whole financial year, because this was their last quarter of the financial year. And yeah, so significantly less receipts in this quarter, and they were actually operating cash flow negative, also free cash flow negative. And the reason I know that is because you can't be operating cash flow negative but free cash flow positive, can you? But they do spend a fair bit of money on other non-current assets, development assets. That's like capitalized research and development, 6.2 million. That's an ongoing cost. So I actually do like to include that when looking at in cash flow. So they were free cash flow negative 10 million, but for the year, $109 million of receipts. So it looks like that first quarter of the year is their best quarter. And they were operating cash flow positive, but free cash flow negative. But they are moving in the right direction. Could it be another Life 360? I actually don't know. It could be. Maybe not to that extreme. But the chart's starting to look negative, and the question becomes, how much further can the negative sentiment in tech drive the share price of this company down? Monogram says, what's the best way to own ASX-listed companies in super? Well, they do have super options when you can buy ASX listed companies. I started with Australian Super. I forget what it was called. I think Super Member Direct. I think it was called Member Direct, where you could buy any company in the ASX 300, Member Direct Australian Super. And they didn't like the limitations on that. I wanted to be able to buy every single company. So there are, here we go. What is Member Direct? Offers you more control and choice over the investments of your super. That's what I wanted, more control and choice. And then I found this first, and then I wanted even more control and choice. So then I went to Net Wealth and, what was it called? Super Accelerator. And this gave me a lot of choice, not absolute choice, Super Accelerator Plus. So I could buy any listed ASX company and companies on something like 15 exchanges around the world, but not every single company on exchanges around the world. There was a little bit of limitations. There was a little bit of lack of choice there, but it's okay. It's what I need right now. So that's, and I'm pretty sure there are other super plans like this or super platforms like this, like Hub24 probably has something similar. So there are a lot of super things out there where you can buy ASX listed companies. You can choose what ASX listed companies you want to invest in your super. So go down that route. Do a lot of research. I was supposed to do a sound and video on that, by the way. Cool. Michael DJ 39313 says, I think major African iron ore producer came online and is shipping to China, i.e. major competition to Australia and Brazil. So this may cap iron ore prices. Yeah, I read this many years ago. Many years ago, and I was definitely not. You're right. The massive Simandou, that was it. Iron project in Guinea, one of the world's largest untapped high-grade deposits, has just started shipping its first cargo to China in late November, early December 2025, a major milestone for China's supply diversification. So when I read about this many years ago, maybe 3 or 4 years ago, it was like, wow, this could be or should be not good news, definitely not good news for our iron ore producers, and maybe one of the reasons why BHP has been actively moving towards copper, that sort of thing. Anyway, so thank you for that, Michael. Great name, by the way, because even though I read about this many years ago, I completely forgot about it until right now. Okay, so VB Ed says, hey, Kneppy, I'm dying to hear your take on Wesfarmers. You know, the company that collects industries like Pokemon cards have snapped up instant scripts. They've already got their claws into Priceline pharmacies, and other rumour mills say they're about to rebrand the wholesalers as Atomica. And also, if they treat the pharmacy sector the same, well, they won't be able to, by the way. The pharmacy sector, the same way they steamrolled the hardware industry, we might as well start planning funerals for the competition. Yeah, I think you're over-dramatising what's going to happen. Personally, I wouldn't touch Sigma Healthcare Chemist Warehouse with a 10-foot pole, and the hazmat suit Wesfarmers is basically the final boss. I actually disagree with that. I think Chemist Warehouse is the bully in that sector. I think they're going to be the ultimate winner in that. Well, maybe not the ultimate winner, but they're the ones who are throwing their weight around. And they did release a nice little update at their AGM, and their growth is pretty significant. And one of the reasons I don't mind Sigma Healthcare, I don't think they're expensive at these levels. And the other thing is they are growing overseas as well. A pretty nice growth overseas. And the other company I don't mind is Harvey Norman. I actually quite impressed with their growth overseas as well, which surprised me when I had a look. I went, I probably diss Harvey Norman a lot, but they're nicely growing. So nice growth with Sigma, whatever it's called. We'll call them Chemist Warehouse. And I just think what I've seen with Chemist Warehouse and their management, they're the ones who have been disrupting that space. And I just don't think Wesfarmers will be able to do that. That's just my own opinion. My thoughts on Wesfarmers itself is every single time I look at Wesfarmers, I become disappointed. I would classify them as high quality, but not the highest quality company on the ASX. Nowhere near. You just have a look at the lack of growth in this company over the last 3, 5, 10 years. This company's been looking expensive. So maybe a lot of the analysis are putting or pricing a lot of growth in the future. Even if you have a look at their margins, not the impressive margins. So every single time I look at Wesfarmers, I don't come away as impressed as I thought I would. And then you have a look at the chart, and I just think, I wouldn't be paying these prices for Wesfarmers. And in fact, if you have a look at the weekly chart, do what I always do. If I do classify this company as high quality, the share price is well above the 200-week moving average. Well above. So share price would have to fall to, say, $66 before I might even think about. It's not that far off, by the way. Anyway, so yeah, I actually would say, counter to yours, that let's actually put this into what would happen if I put this into ChatGPT. Let's have some laughs and giggles to say I receive this. Receive this. What are your thoughts? Look at my spelling. Terrible. Ewot. But it knows. So let's have a look. That message is funny, but it's also doing a bit of a rhetorical heavy lifting that deserves unpacking. Here's my clean take. Separating the meme from the reality. Wesfarmers is a monster, but a very specific kind. Calling Wesfarmers the final boss isn't wrong, but it's incomplete. Wesfarmers isn't great at innovation. It's great at capital allocation. Ooh, there you go. Scale economies, process discipline, grinding competitors down over years, not quarters. That's exactly what happened in hardware. Bunnings didn't disrupt, it out-executed. Lower prices, better logistics, and relentless reinvestment. Independence slowly bled out. So the fear is understandable. If they do a Bunnings on pharmacies, everyone else dies. But pharmacies does not equal hardware. And there is a very powerful pharmacy union, or I forget what it's called. Very powerful pharmacy, something or other. I forget what it's called. Hardware deregulated, no government pricing, no ownership caps, scale wins cleanly. Pharmacy, heavily regulated, PBS controls pricing and margins, ownership rules, even with loosening, location and dispensing constraints, much higher political sensitivity. Wesfarmers can't simply lower prices until competitors disappear. Margins are already structurally capped, so the upside from the scale is real but bounded. Instant scripts plus price line smart but not apocalyptic. What else? It says the Atomica rebrand rumor red flag. If the rumor is true, I'd be cautious. Yeah, okay. So Chemist Warehouse is brutally low margin, scale dependent, execution must be flawless. Any regulatory supplier squeeze hurts fast. But here's a counter. Chemist Warehouse already operates like a final boss, which is what I mentioned. Private label dominance, aggressive pricing, incredible inventory turnover, founder-led, something I didn't mention, culturally sharp. The other thing I'd like about Chemist Warehouse is their expansion overseas. I do think that has potential to grow. So, yeah. Anyway, that's what I'm going to say about that. So it's good to disagree. And it's also good to have counter opinions. So it's good to have someone who thinks on the flip side of what you think. So thank you. Ben Hutchinson says, Starpharma SPL data chart looks amazing. Yes, it does look amazing. There's a couple of, actually, I want to talk, there's another question about, hey, Lewiston says, hi, Kneppy, are you still a shareholder of Starpharma? If so, the volume is very low, which I'm going to get to in a second, because I have been thinking about selling Starpharma. But there's another reason why I bought it, Starpharma, and it wasn't necessarily the chart. Anyway, the chart looks amazing. It does, but well, except for one thing, the volume. But the 20-year chart and quarterly cash flow report makes me cautious, and I wouldn't even have a look at these yet. There's one reason I bought into Starpharma. So let's have a look at the most recent pennies 4C. And I'm assuming they haven't got much. They don't receive much receipts. No, so very low receipts. So for me, it's not about the current financial situation. It's about the potential of what's coming. And the most important word there is potential of what is coming. Investors are essentially betting that this time is different. This company's been around for 20 years, previously had a market well over $500 million. Wow. And already had multiple products in market. But in the last quarter, their sales of 900,000 were dwarfed by staff yet. Well, that's true. That's true. But my main reason I got a little bit excited about Starpharma was simply the deal. Yeah. Starpharma announces license agreement with Genentech. So I wouldn't say it's de-risked the company, but if Genentech is seeing potential, I think they are seeing potential in whatever they're doing, and they're willing to pay a lot of money for that potential. And it's only potential money. So they've already received an upfront payment of 8.3 million and is eligible for development commercial net sales milestones of 855 million, as well as tiered royalties on global net sales. Now, in the past, I wouldn't have reacted to these type of announcements like Neuron Pharmaceuticals. I waited to successful phase 3 trials, but I've just changed my tact. And what I've done now is I reacted to these and I've taken position in companies like Starpharma, just based off this. Starpharma, Demerix. It's another one recently. Immutep, yeah. They've all announced these really big deals. And the reason I get a little bit excited is because it seems like the market is recognizing these big deals as well. It doesn't completely de-risk the company, but by the way, weekly chart, oh yeah, it does look terrible. Share price is high. It's 250, not like long ago, by the way. But definitely the bottom has been reached so far. So share price, and I bought, yeah, so I'm more than double. Looks like I'm about double up on this one. Maybe not quite. And then, by the way, the daily chart doesn't look all that bad, except the volume. I would like a little bit more volume coming in. Now, in saying that, we did see the share price rally on the 11th of 12th of November, and there was some nice volume on that day. And since then, the share price has been going sideways, and the volume has been decreasing. That's not a bad sign. And yeah, I wouldn't be selling this just yet because there could be a few more legs up. And the valuation of Starpharma isn't that high either. It's only 152 million at this level, which is actually quite a bit lower than, say, Demerix and significantly lower than Immutep. So I think a lot of this negative sentiment, maybe not negative sentiment, but maybe one of the reasons why the valuation isn't quite as high as some of these other companies could be because of the past, as Ben Hutchinson says. But I do pay attention to the volume, and I need to see some higher volume coming in soon because this could continue to drift lower. So I've been thinking of maybe taking profits in this one, but just thinking. Anyways, but all this other, yeah, I wouldn't even look at their pennies 4C. It's based off the deal they had and the potential of that if everything goes right. That's a big if everything goes right. Just acronym says Inghams, total liabilities 2,087, equity 277, 7.53x. Yikes. Now, the reason I want to talk about this is because in the back of my mind, I remember seeing this and there was a reason behind their liabilities. And Inghams Group, I'm going to cheat again. Inghams Group has huge liabilities. And what was the other one? Huge liabilities and low equity. See if this triggers something in my memory. Is this a red flag? Red flag. Because in the back of my mind, I did read or hear a justification for it, and I can't remember it right now. It can be a red flag, but with Inghams, it's more of a know exactly what you're buying situation than an automatic no. So Inghams' balance sheet jumps out because it has very large liabilities, relatively low equity, net debt that looks chunky versus book value. At face value, that triggers every weak balance sheet alarm investors are taught to watch for, but the composition matters more than the headline. Lease liabilities, that's it. That's one of the things, yeah. Lease liabilities. Ingham runs farms, processing plants, distribution facilities. A lot of these are leased, not owned. Under accounting rules, long-term operating leases are capitalized. They show up as lease liabilities. There's a big debate whether these sort of liabilities should be recognized as debts. I don't know. I've seen and heard both sides of the story. Equity doesn't get a matching boost. So the balance sheet looks worse than the economic reality. This is common for food processors, retailers, logistics-heavy businesses. Working capital intensity. Ingham also carries large inventories, payables linked to feed growers, logistics. This inflates both current assets, current liabilities. Again, not unusual. Is low equity itself a problem? Okay. The reason, yeah, I'm pretty sure this was Ausbiz's core, and Howard Coleman just said, no, stay away from Inghams. Or it could be someone else. Stay away from Inghams. Look at their balance sheet. And then someone else, I think, might have mentioned, hey, yeah, that's not exactly true. Anyway, I do like what it mentions here. You should compare like for like. So compare Inghams to maybe Bega, Treasury Wine, and Saputo. Walk through what would actually break the business or stress test the business balance sheet under a margin shock. Anyway, if we have a look, whoops, that's the wrong thing. If we have a look, Inghams, most recent report. By the way, I have no interest in holding Inghams at all, Let's see if this opens up quickly. It's opened up much quicker than it was before. I have no interest in trading Inghams or anything like that. Let's have a look at the chart. Maybe I'll change my mind when I have a look at the chart. I don't think so. Yeah, no interest in this chart at all. Based off the historical levels, though, share price is an all-time low for Inghams. But let's just have a look at their most recent annual report. Or not annual report. We'll have a look at their most recent financials. That's what I wanted to say. Director's report. No, I don't want that. I want the balance sheet. Here we go. So they have a lot of right of use assets. So that is actually in non-current assets. And typically, if I say lease liabilities, $819.7 million. Borrowings, they do have a fair bit of borrowings, $536.8 million. Equity is low. I don't know, because they do have a fair bit of borrowings. I don't know. So the right of use assets, that's non-current assets. It did mention here there's no... So equity doesn't get a matching boost. Okay, that's true. Yeah, it's in the non-current assets. Yeah, so we have non-current assets, right of use assets, which is the lease liabilities. Okay. I'm trying to see anything else that looks terrible here. Trade other payables are really high. They are high. And if we go to, but if you go to the cash flow statement, by the way, and one of the benefits of lease liabilities being in the balance sheet is they're not featured in the cash flow from operations, which I actually do have a problem with, because leasing a premises for your operations, that just seems like it should belong in the cash flow from operating activities. But so these sort of companies, I will have a look at the operating cash flow, and then I minus the leases, and lease payments are fairly big. They have a lease payments principal and interest. So that does knock down the operating cash flow a fair bit, and the free cash flow a fair bit as well. So that's one slight adjustment I do make for these type of companies that have large leases. Anyway, so there has been debate about this, that Inghams liabilities and equity and debt to equity are a little bit overstated. And I still am unsure about exactly how to argue that. Just Acronym says, Eagers Automotive failed to break double top, now in a downtrend, down 30% from peak. And funny enough, this one popped up on my radar. Actually, no, it didn't. No, it wasn't Eagers Automotive. It was, it was Austal. This one has is possibly moving into a downtrend. Yeah. So definitely the uptrend in Austal has come to an end. And I think the first sign of this one was the double top. And then there was a sort of almost a trend-killer event on the 9th of October. And share prices started to go lower. And so a lot of these type of companies were starting to see a bit of weakness, nice uptrend. And you look at this, Eagers Automotive, share price got to $36. I was wondering why people were so eager to buy it. So eager to buy Eagers Automotive at that point because it looked really expensive. And there wasn't significant tailwinds behind this company, and the share price is starting to go lower. The time to get into Eagers Automotive is when there was a lot of negative sentiment in this space, and that was back in middle of 2024. And I was thinking of doing it. I was thinking of buying it because I thought there was a little bit too much overly negative sentiment about this company. And now I'm thinking there was a little bit too much overly positive sentiment about Eagers Automotive, but definitely it does look negative right now. Oh, and by the way, just like I mentioned, double top. So Austal had a double top, and this one. Are they identical? Both had double tops at exactly the same time. Oh, not quite. A little bit of a difference with the double tops. Double tops are quite powerful, I think. Maybe not as much as triple tops. How successful are double tops in technical analysis? So that's one thing a lot of people don't understand about technical analysis. You're not going to get something that's 100% foolproof. So yeah, double top is self-explanatory. I'm so happy they put in some a bearish reversal pattern. I'm trying to, based on work by Thomas Bolkowski. Thank you. One of the most cited pattern statisticians. Breakout success rate 65%, false breakouts 35%, average decline after break 15 to 20%, meets measured move target 55. A double top works about 2/3 of the time after confirmation. The single biggest mistake traders make, trading the pattern before the neck break line. The neck line breaks. 2 peaks alone, nothing. You need confirmation. Yeah, I actually do agree with that. Many failed double tops were never confirmed in the first place. Yeah, so in this case, let's do that. Let's do that with Austal. So the break would be there. There it is. Oh, it actually works perfectly. So you can see how it breaks. So there's a little bit of a dip. That's the break. So you're looking for the breakout below that, which happened on the 13th of October. And look, it tested it. It tested it. Share price rallied back up to this level and then it's going down again. And let's do the same thing with Eagers Automotive. So what we'll do is, that's more like there. And yeah, it's definitely below that. Thank you, trading. Thank you, whatever this is, ChatGPT. Wow, there's a lot of it. Wow, geez. Stocks versus indices versus crypto. Individual stocks higher, indices lower, crypto much lower. Double tops versus other reversal patterns. Head and shoulders higher, double top medium, triple top slightly higher but rare. Rising wedge similar. So head and shoulders. Double tops are solid but not elite. How professionals actually use them, they rarely used alone. Yeah, that makes sense. Work 65% of the time. Chris says, thoughts on Audinate had a little rise lately. Let's have a look at Audinate. So I do own Audinate, but when the sentiment starts to shift in this company, I would add to my position. And I don't think we're there yet. So even though the share price has risen, we have seen this happen quite a few times in the past. Look at, and some of these rises, some of these bounces have been quite extreme. Look, we had one in February. We also had one in May, another one in October, and this one has been sort of not that extreme. But the share price is still in a well-defined downtrend. In fact, the downtrend happened or started to happen way back in May of 2024, and the share price just keeps on dropping. So yeah, I'm definitely not there yet with Audinate. I can see this share price continue to drop. Markup is only 365. All it takes, all it needs is one positive announcement from Audinate. I do know they don't have any expectations for this financial year. Or maybe it's them. I don't know. I can't remember now. Let me have a look. I just remember thinking it's not the current financial period. It's the next financial period where I think things start turning positive for Audinate. But the market should be forward-looking. So if that is the expectations, we should start to see a little bit of strength in their chart, unless the market is not convinced that's going to happen. Okay, I'm going to move on. Louis Don, hi Kneppy, are you still shadow of? I've already talked about that. SS3 Veggie Tar. Hi Kneppy, love your channel. What are your thoughts on Alfabs, AAL? The company does mining services and fabrication. It's been on the ASX since July 2024. Low valuation and profitable. Reminds me of Shape and Symbol. I actually do have Alfabs on the same level as Shape and Symbol. So I'm just going to show you Shape and Symbol. This is important. So Shape and Symbol, I got technical signal. Well, definitely got a technical signal for Shape. I took a little bit of time to get in this one. So the break, and I think it was because it was illiquidity traded. So I got the break back in late 2023, and then I bought Jan, $1.68. Share price, you can see the share price dropped on the 29th of February. Share price dropped 12%. They went ex-dividend on that day. Imagine selling just because they went ex-dividend. You probably, someone sold at $1.70, and now the share price is 6.1. And this has been a beautiful chart ever since. I haven't even thought about selling this one. Not one single time since I bought have I even thought about selling. Not once. I've got my sell price at 445. I'll probably have to lift that at some point. So one of my longest trades so far. Symbol is a recent holding and listing. And they listed in November 2024, looks like. Share price did nothing, and then the breakout happened. I don't even remember if they released any positive financial news or anything. I just like the chart, this one, and I like the volume. Look at the volume increasing as well. So that's the reason I bought into Shape and Symbol, is just what I saw on the chart and the volume. Let's have a look at Alfabs. So this is in the same sort of area. In fact, I do put these three companies together, and what I don't have with Alfabs is any sort of signal right now. Now, we did sort of get a few signals, but the volume, the thing that's holding me back is the volume. Not seeing any big volume coming through compared to Symbol. And with Shape Australia, it was just a chart, beautiful chart. So I haven't quite got to that same point with Alfabs. Now, valuation, P ratio 9.62, dividend yield 7.9. It's one thing I haven't looked at with Alfabs is the valuation of the company. Market cap 116. So what we should be seeing is some sort of market reaction to the valuation. We're not really getting that. I'd love to see that, because that would give me a really good reason to buy in. Sort of like a catalyst to buy in. But anyway, Alfabs is definitely on my watch list. SS3 VGT8. P-Woo says, hi Kneppy, what are your thoughts on Swoops retail entitlement offer 10 cents considering its market price? Thanks. I have no interest. I actually do own shares in Swoop, but I have no interest in this. It's in my super. I'm just maintaining a holding for the long term. And in fact, I will trade this if I see the share price starting to turn, because I do think there is an argument that this is really cheap. I don't like that they did this capital raising, because the chart looks terrible. Okay, I'm being a little bit harsh on the company. Chart looks terrible. It's been looking terrible. There's me buying at 19 cents. So share price has dropped a fair bit. I just thought it was really good value at that point. I still think it's good value, but they just, it's been a bit annoying, this company. But it's a small holding because I wasn't that confident. I just thought there was good value here. And maybe I should just trade this one. And then they did the capital raising after share price had dropped from 19 cents, which was even for me, down to 13 cents. Oh, we'll do a capital raising after share price has dropped 33%. That's what I don't like. They should have done the capital raising back in October, early October. But I have no interest in their retail entitlement offer. And the other thing is, has the share price dropped to 10 cents? No. Oh, very close. I wouldn't be surprised if the share price drops to 10 cents, even below it. And then you could buy shares at a lower price than the capital raising. Just saying. I actually did get the notice if I wanted to partake in the capital raising, and I just ignored it. Okay. Sensei says free 3-month access worth $1,200 for Motion Trader, and I have accepted it. Yes, I signed up to this. Got a few emails from Motion Trader. So this is, and by the way, Sensei provided the link, and no credit card. Yep, I didn't have to give him my credit card. All I did was put your name, email. I don't like putting phone numbers in, but I sort of understand it. And then investor type. That was all I have to give, and then immediate access. So for those who want to trial something like Motion Trader, who like the technical analysis side, this could be a nice little trial, because it is a trial, 3-month trial. Seems open for anyone to join, as it does not ask for any self-wealth client proof. There you go. I did not know that. Yeah, it didn't ask. Yeah, I thought maybe it'd only open it up for me because I am a self-wealth client. But yeah, it's not that good if it's only for self-wealth clients, but everyone can sign up. Okay, so Jeffrey Irving was getting upset because of tissue repair. Capital Seth says, hi, Kneppy, great video. Video. V-E-D-I. I sort of understand why people misspell, because I sometimes type really quick and then I don't scan what I've written. And so it's released into the outside world, my misspellings. Say your review of Cogstate reminded me of what's happening with Bioxyne. Would love your opinion on that. Cheers. So I still own Bioxyne, but been very close to selling this one because I do think there's a chance that this company's margins will be significantly. There's not much of a moat, and we saw this with another company. Oh, what company was it? What company was it? Let me have a look. I'm pretty sure it starts with V. I'm gonna have a look at health, my health watch list. It's probably near the bottom because I've got this in lists by market cap. That's it, VIT. Ventura Health. This company had a really nice period where they had really nice margins and revenue and, well, not revenue, but profits. And then no moat, absolutely zero moat. And share price got as high as $1, got as high as $1 back in 2022. And then you just saw in one period, their margins just plummeted, increased competition or something, I forget, in a similar space as Bioxyne, by the way, not completely the same. And the share price has fallen from $1 down to 6.1 cents. I've been continuing to follow this, but the chart does not look good. So that's my main concerns about Bioxyne is no moat, potential for, and I think we even saw it maybe in the most recent pennies 4C. I still haven't sold out, by the way. I don't know why. I bought it 1.2. It's at 3.9. Maybe I'm just willing to give this a little bit more room. But yeah, it's a nice little three bagger. The most recent pennies 4C, I think you had to ignore this one because it seems like they were highly operating cash flow and free cash flow negative because they built up their revenue or their inventory maybe. So receipts 12.9 million and operating cash flow negative by $4 million. And I think the reason they gave was, substantial investment in cannabis flow procurement and working capital. So this could be just a one-off. So I think their next pennies 4C is going to be important for me. And also any sort of margin compression, I would be out straight away. Ben Hutchison, talking trend killers, I could swear XRF Scientific was in a short-term downtrend. Boom, downtrend be gone. 14-inch solid green candle out of blue on no news. What was a green day for gold? I have a hunch it's something to do with Ben Richards of Seneca, who nominated XRF as its highest conviction pick for 2026 on Money O Mind last night. I did have a look at this. I noticed the share price the chart was looking weak, and then also on the share price popped up. And the share price was getting very close to the uptrend line. So this is a long-term uptrend line for XRF Scientific. And there's me buying $1. And It was getting very close to that. So if you're trading this, it's not the best looking chart in terms of, you wouldn't be trading this. There's no really good short, medium term trend. There is a longer term trend just based off the weekly chart. And by the way, if you have a look at the 200-week moving average, by the way, this company, based off this, is high quality. The last time the share price was below the 200-week moving average was in March 2020. So there are a lot of tailwinds behind this company because of what's happening with the gold sector, that sort of thing. But I would still say this company is cyclical, so maybe not a long-term hold. But the chart looks nice. My only concern about XRF Scientific was a weak update they released maybe 6 months ago, but seems like the market doesn't care about that. P ratio 27.53. Anyway, that's all I'm going to talk about when it comes to XRF Scientific for now. RC Bear X says our tech sector is no good. That's why I would disagree with that. I think our tech sector is actually pretty good, but I would probably say it's the valuation. A lot of our tech companies, when you have a look at the valuation, are actually valued at a premium compared to other tech companies in other exchanges around the world. So I think that's the reason why we have seen significant weakness in our tech sector, not because it's no good, but because of valuation reasons. Like WiseTech, P ratio was over 100, even 0 P ratio, Pro Medicus P ratio. So a lot of the valuation of our tech companies were at a premium, and I think they're at a premium because of the lack of tech companies on our exchange. Maybe agree with that. Just Acronym was wondering why James Hardie share price went up. Didn't hear any news. They did release news. Well, maybe not on the 11th. So I actually did take a position in James Hardie and put into my super. It's a company I've been umming and ahhing about a long time, whether this company is high quality. And then I just went, yeah, okay, it might be high quality and maybe negative sentiment. There's maximum negative sentiment at these prices, like at $25, maximum negative sentiment. How worse could it go? And then they did release something positive, which was the catalyst for me deciding, yep, this is the time to buy some James Hardie for the longer term because I do think it's cheap. And it's a high quality company. Just remembering when they released it. Was it the Q2 results? So let's go back to the daily chart. So share price was up on the 11th by 7.13%. Yeah, that is a big rise in one day on no news. But the day, what day was that? 18th of November. Was that the day where they did release something positive? Yeah. Share price on that day rose 10% on the 18th of November. It was actually a positive update from the company. And so that was sort of the trigger for me to take a position. And the share price was low enough that I thought there was some good value. But I wouldn't trade it because if you have a look at the daily chart, it's ugly. It's not a good daily chart. So for me, this is more of a high quality company, good value, that sort of thing. Was I high quality? I'm still fighting with myself. Is it high quality? But did they release anything? No news. So it could be a broker report or something. No idea. Oh, Peter M. Hey, Kneppy, what are your thoughts on a portfolio structure for retirement? I'm considering building an income dividend portfolio separate from my long-term growth portfolio, potentially live off of dividends, or do you reckon it's better to continue with growth stocks and just sell shares as needed for income? On average, good income stocks seem to pay about 5 to 8% dividend, cover growth to match CPI and acceptable volatility, while good growth stocks are 0 to 2% dividend with better potential capital growth, but with more volatility and risk. Your thoughts? I know you're not a financial advisor, but I'll be interested to hear your plans. Thanks. So I can't give advice, of course. No individual advice or anything like that. I've been thinking, I'll be honest with you, I've been thinking the same thing to the point where even in fiscal AI, I developed this income screener. So 76 results. Unfortunately, banks are at the top. So I do I'm pretty sure eventually when I do go down this route, and more than likely I'll go down this route, but in saying that, will I have to? I don't know. I think eventually I will, but the companies I'll be looking for aren't the sort of companies that are traditional income plays. I still want growth in my income companies because I want the dividend to grow over time. You definitely want your income to grow over time. Now, the other thing is, at some point, I won't need to build my capital because what's the point of dying when you have all this money? What's the point? So I probably want to dwindle my capital over time, but not all that much. I don't know. Haven't really thought about that much, but this is definitely something I've been thinking about. Haven't got to a point where I'm comfortable going down a certain route in terms of what the sort of companies I'll be willing to buy into long term. But if you have a look at my super, there are no income plays there. It's all growth. It's all growth. But eventually, will want to start to transition. Maybe 20% of my companies and my super should be income plays. I won't buy banks. I definitely won't buy banks. So maybe I need this to be a little bit, this little screener to be different. What could I change? Oh, you know why banks are in this particular screener? Because I've got a 5-year revenue growth and 5-year dividend per share growth. What happened 5 years ago? COVID-19. Hence, a lot of these banks are showing up because if you go back to the 2020 numbers, they were really low. So you actually really have good growth over the last 5 years, but that's a little bit deceiving. So straight away, well, that probably makes a lot of the other companies deceiving as well. So maybe what I could do is see if any of these companies, like you got Shape Australia. And that was the one good benefit of Shape Australia, me just trading Shape Australia, is I didn't buy Shape Australia for the dividend. And then all of a sudden I was getting these really big dividend payments from Shape Australia because they had a really big dividend yield when I first bought them. So dividend yield right now is 4.1%. But when I first bought them, I was like 10% dividend yield. It's like, woo, yes. So I haven't really developed any strategy just yet, but it is something I'm thinking about, and eventually I think, go down this path. Eventually, but I'm not sure exactly, sort of like what you're thinking here. Yeah, building an income dividend portfolio separate from my long-term growth portfolio. So that is something I'm thinking I probably should do, maybe in my super, maybe not even I don't know. Not even sure just yet how I'm going to do it. But I think it's very wise to start thinking about that sort of thing. Sensei says, could you do a quick chart analysis of TMG? Didn't I do this? TMG. Oh, PGM. Okay, let's have a look at TMG. Gold Explorer. Let's have a look what they do. I don't know anything about this company. Oh, antimony. Okay. Chart for TMG. First of all, let's go back to the breakout. Oh, look at that. So there's a big volume spike on the 12th of June. Volume precedes price action. Now, that could be, even following up from that volume spike, there was actually a few days of high volume as well. So that was on the 12th of June 2024 when the share price was 0.7. So I wouldn't have even thought about this company. And then the share price got above 1 cent in August and just kept on going up on increasing volume. We had a bit of a dip here, so chart doesn't look as good there, but then the share price started to turn around again. Beautiful run up to 23 cents. It's been a good 23 bagger for those who got in 1 cent. Share price has pulled back from 23 cents down to 11 cents. So share price is halved. You could do Fibonacci, that sort of retracement and that sort of thing. I don't do that. What I would like to see here is we have seen the share price go sideways for a period of time. So the selling has stopped. We have seen volume become lower and lower. So a little bit less interest. And the one thing I'd be looking for here, if I was trading this, is, so you put a line there. I'd put a line right there. And if I see the share price get above the top of this line, so about 13 cents on good volume, that could be the breakout. So you sort of a similar thing to here. What you're doing is you're just waiting for the share price to get above that level, and it did it on. It just blew above that level on the 25th of September. Share price up 31.82% on that day. Or you could just buy within this sort of range, between, was it 10 cents and 12.5 cents, and buy towards the bottom of the range. And then if the share price breaks out, well, you've done well. But the share price just breaks below, say, to 10 cents or just below 10 cents, so you could just sell at a sort of like a low-risk trade. So I don't mind this. I like to see a bit of confirmation of a breakout to the upside. But if you're confident that's going to happen, which I've done in the past, by the way, I've done in the past when I haven't had confirmation of a breakout, I just said to myself, it's going to happen. Don't know why I'm confident, because that's the worst thing to do, is being confident, because we tend to overestimate our confidence in many things, particularly when we don't know much about something. We say we're way more confident than we should be. Anyway, but I've done that before, and it's worked most of the times. So maybe I am dismissing myself. Oh, okay. So here we go. Simon PT says, we'll be doing this annual event where you ask your viewers to nominate their favorite stocks for 2026. Next year should be interesting. I think AI stocks might take a breather, while the commodity sector should start to continue to shine. Sensei says, can we get an update vid of how the viewers' picks for 2025 went, and how Kneppy's 25 picks for 2025 went? Funny enough, I had a look at this yesterday. Just to see how I was performing and you were performing, and some good, some not so good. But I do plan to do this, and I have to get a move on because we've only got 2.5 weeks left. So I should do these videos soonish. I'm going to have a look to see when I started this process last year, and I'll do the same thing. So I will be releasing these videos because we are moving. We're already in the quiet time of the year. Yeah, we're already in that period. Okay, funny enough, Digi says, did you end up buying MEU? And then David says, have you sold MEU? And these comments were almost like within minutes of each other, I think. I did buy MEU. I think I mentioned, if MEU pulled back to 12 cents, I'd buy. I bought some. This is exactly what I want to see. When the share price pops up 83% on huge volume, whenever I see a little bit of a pullback, yes, that's good. That doesn't necessarily mean the share price is going to get higher. I would have preferred to see a pullback to maybe 11 cents. That would be nice, but I do like this chart. Now, it doesn't mean the share price won't continue to drop, but this is the sort of little trade I'm playing right now. And it's, at this point in time, this little trading little, what do you call it? I don't know what I'm going to call it. This little experiment I'm doing has been a little bit successful so far, and Marmota is the most recent buy I've made. So I did buy, have not sold. And just acronym, please update review on Amplo. Thank you. Okay, full disclosure, I am trading Amplo. Let's have a look at the chart. This, I'll be honest with you, this is a sort of chart I like. It's just a slowly grinding chart upwards, sort of like a horizon. I also got into this one. This one is a little bit more or less grinding upwards. What's the other one? Oh, APA Group. Oh, this one's turned a little bit, no, not that negative, but this one's another one that's just going slightly higher. Okay, so back to Amplo. Okay, so it was just a bit of a shift in sentiment. And then I was just unfortunate. I bought on the 23rd of July, and then they released something positive on the 15th of August. So that was a nice little confirmation. Now, Amplo did, by the way, Amplo did release something recently. It was sort of disguised as a not that important of an announcement, but it was a US Roadshow 2025 presentation. I actually did have a look at this, and there was something really important in this that made me confident about Amplo moving forward, and that was the refinery margins. refinery margin, somewhere here. Oh, they also mention, I've said this a lot, capital allocation is the most important job of management of a company. And whenever I see a lot of capital management or capital allocation, same thing really, in an announcement like this, I think it has to be there because it's the most important job. So track record of significant capital management, a well-defined capital allocation framework. So we're talking about capital expenditure, capital structure, dividends, growth capital expenditure, capital returns, that sort of thing. So I like when they have that. But the one thing, here it is. So light and refinery margin continues to strengthen. So it looks like the worst of it was about, what's that? Yeah, 1 year ago. It was about 1 year ago. The third quarter was 10.64, and the last 2 months it's gone up even further. So I do think this is fairly positive news for Amplo, and another probably reason why the share price is moving up. By the way, I did actually ask ChatGPT, and I'm wondering if I can find it. I do a lot of stuff on ChatGPT right now. Here it is, light and margin and petrol prices. I just asked. I just want to know if their margins are, refinery margins are increasing, is there a chance we could see petrol prices dropping because their margins are increasing? And it said no. It said no. What the light and refinery, the profit Amplo makes turning crude oil into petrol, diesel, and jet fuel, it essentially refining margin equals price of fuels, cost of crude oil. This margin moves based on global crude oil prices, etc., etc. A lot of things there. It has nothing to do with what Amplo charges at the pump. Why strong refining margins don't mean higher price? Well, that's not what I asked for. I was wondering if they could decrease the price of petrol and it wouldn't affect their margins as much. You know what I'm talking about. The retail price you pay depends on Singapore gasoline prices, MoGas 95, exchange rate, the petrol price cycle, local competition. My local petrol station doesn't change their prices at all. There is no price cycle. It's $1.76 right now. It's going to be $1.76 for the next week, 2 weeks, 3 weeks. It's been $1.76 for the last 3-4 weeks. It just doesn't change its price. There's no competition. It doesn't need price. I don't know. It's a good price, by the way. Why haven't petrol prices dropped? 4 likely reasons. International fuel prices haven't fallen. Australian dollar is weak. Retail price cycle timing. Refinery margins don't influence retail directly. Amplo could have high refining margins, low retail margins at the same time. And then try to give me an analogy and bottom line. Anyway, that is all I have for today's video. I try to keep these particular videos under an hour and 30 minutes, and I've done it, hour and 27 minutes. I thought that was not going to happen after my first answer. Lasted 15 minutes, but here we are. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you have financial needs, go find someone who can help you and, speak to your own financial whatever. I forget what I say in these usual things. Anyway, that's it for today's video. Have a good day. Bye.